Let's talk about Zen Technologies. It's one of the hottest names in India's defense space right now. But when you really start to dig in, you find a story that's, well, it's full of contradictions. So in this explainer, we're going to break down what's really going on with this company by looking right at the numbers.
Okay, so let's get right into it. The whole puzzle around Zen Technologies really boils down to this one central paradox. On the one hand, you see all the signs of a company that is absolutely crushing it. But on the other, there are these signals that are making investors, well, pretty nervous.
First, the rocket ship part. And no, that is not a typo. Zen's revenue has exploded by over 1,600% in just 3 years. I mean, that's the kind of insane growth that makes everyone sit up and pay attention.
But then, there's this. Over the last 6 months, the stock is down 20% from its high. So you have to ask, if the business is growing that fast, why is the stock price heading in the opposite direction? This is the heart of the problem.
And that brings us to the big question we're trying to answer here. Is this just a little bit of turbulence for a high-flying growth story, or are we looking at a deeper, more fundamental red flag? Let's break down both sides of this argument.
Let's start with the bull case. All the good stuff, all the powerful reasons investors are so excited. You know, what's the rocket fuel that's been powering this thing forward? It really begins with a massive push from the government. At the core of the whole bull case is this one policy, Atmanirbhar Bharat, which means self-reliant India. The government is basically saying, from now on, we're buying Indian. This creates a huge protected playground for domestic companies like Zen Technologies to thrive at.
And this chart just shows you the impact perfectly. You can see their revenue just shooting for the moon, from a pretty small 40 crores in FY21 to almost 1,000 crores just a few years later. So this policy isn't just talk, it's translating into very real, very big numbers.
What's so fascinating here is that it's not just one thing. It's like a perfect storm of demand drivers all coming together at once. You've got the Agnipath scheme, which needs to train tons of people fast, and simulators are perfect for that. You've got the government policy pushing for exactly what Zen sells. And on top of all that, they've built their own little fortress of intellectual property, plus they're already proven they can sell this stuff globally.
And to put the cherry on top, the company just raised 1,000 crore rupees back in August 2024. With almost no debt, they're sitting on a mountain of cash. It's a financial fortress that lets them fund future growth or buy other companies. So the bull case looks pretty solid, right? Well, let's flip the coin and look at the other side of the story.
Okay, now for the bear case. What are the warning lights that are flashing on the dashboard? What's behind that 20% drop in the stock? It really all comes down to one really important number.
And here it is, the order book. Now this basically represents all the confirmed business they have for the future. And as you can see, it's shrinking, and it's shrinking fast. It went from over 1,400 crores down to just over 800 in less than a year. That's a huge deal, because it suggests the pipeline of future work is starting to run dry.
Now, the crucial thing here is, this isn't just some analyst making a guess. This is a direct quote from the company's own chairman. When the leader of a company that's been growing like crazy uses the word muted to talk about the next year, well, the market gets pretty spooked. The other big worry is the competition. I mean, Zen is an innovative company, but it's a relatively small fish in a very, very big pond. It's going up against government-backed giants like Bharat Electronics, a company that is literally over 20 times its size. Not to mention huge private players like Adani Defense.
So, we have these two really powerful but totally conflicting stories. To try and get some clarity, let's pop the hood and take a quick look at the company's financial DNA.
This chart shows us where the money is actually coming from. So their bread and butter, about 70%, is military simulators. But the part that everyone's got their eyes on is that 20% from anti-drone systems. That's seen as the next big growth engine. And that little 10% from maintenance? That's small, but it's super stable recurring income.
And this right here, this is one of Zen's superpowers. The company is exceptionally profitable. Its EBITDA margin, you can think of that as its core operational profit, is almost 40%, which is way higher than its competitors. And that's because they're not just selling hardware, they're selling high-value IP and software, which always comes with juicier margins. Okay, so we've got the incredible growth and amazing profitability on one side, and then the shrinking order book and massive competition on the other. How in the world do you put all this together to come up with a clear verdict? Well, it all really boils down to this one question. Is the recent slowdown in orders just cyclical noise? You know, a temporary blip that happens when you're dealing with big government contracts? Or is it a structural problem? meaning the competition is really starting to bite and the whole growth story is fundamentally changing? That is the billion-dollar question.
So to help you answer that question for yourself, here's a simple little dashboard with 3 key numbers to watch. First, order inflow. Is the company winning at least 200 crores in new deals every quarter? That's a good sign. Second, can they land a huge anti-drone contract to prove they can play in the big leagues? And third, can they keep those fantastic profit margins above 38%? These 3 numbers will tell you the real story going forward.
And that leaves us with this final big picture thought. The story of Zen Technologies isn't just about one company. It's really a test case. Can a nimble, software-first innovator find a way to scale and thrive in a market that's dominated by massive, capital-heavy giants? The answer is going to have big implications for a lot more than just this one stock.